Hello traders, this is Blake Morrow and you are listening to Trading Tips with ForexAnalytix. I'm here to talk about the most exciting market in the world, the 24-hour currency market. Now, just because a market is open 24 hours a day, does that mean you should be glued to your desk trading 24 hours a day, all day long, all week long? The answer to that question is probably not. And I think your profit and loss or your P&L column at your broker would probably agree with me. There are certain times of the day where you're going to get increased volatility, and there's certain times of the day that the spreads between your buying and selling or your bid and ask become much more narrow. And if I can help you maximize that potential with this video, I'm going to do so. So we're going to get to the trading desk, but before we do, if you like seeing content like this, give us a thumbs up, subscribe to the channel down below so you don't miss any of our great content that we post here. All right, guys, I'll see you on the trading desk. Hey traders, this is Blake and welcome back to the desk. Now, I'm gonna show you something on ForexAnalytix.com, and this is our site. This isn't meant to be a commercial for ForexAnalytix, but I want to show you this tool that we have. And if you want more information about what I do and the rest of our team, ForexAnalytix.com with an X, ForexAnalytix. Okay. If you're on our site and you get over to our platform, you'll notice on the right-hand side we have a bunch of different tools: news feed, Twitter, whatever. Extra tools, far right-hand side. We have our risk management calculator, which I happen to use all the time. But down below, this is our market trading hours. And this clock is it's synced to your computer. So you can see what major equity markets are open. Right now, it happens to be the US equity markets. And what happens is when you have, and this is something you should probably be writing down, when you have two or more major equity markets regionally open at the same time, you get what we call a cross-pollination of price. That means there tends to be more volatility because there's more participants. When you have more volatility, that means more profit potential or more ways for you to make profit and to get out safely out of a winning trade or maybe even a losing trade with the least amount of damage, the more volatility there is. Also, your spreads tend to be more narrow. Now, what I mean by that is when you trade the currency market, you pay the asking price. If you buy the ask, you have to turn around and sell to the bid. Well, your retail brokerage firm might have a 1 pip spread. If you buy something and then the spreads are really wide and you sell it, you're automatically in a loss. Now, if you're with an institutional brokerage firm, like let's say JP Morgan, okay, you might have a very narrow or maybe even non-existent spread, but you'll still have to pay a commission. But most retail brokers, they don't charge a commission, they just widen the spread and they make their money inside of that. So the reason why you need more volatility is because if you go to buy the euro dollar and you pay the asking price, it needs to move up a 1 pip, maybe 1.5 pips before you even become break even or profitable. I hope that made sense to you. Now, if you want to figure out how it looks on a chart, go to the euro dollar, pull up the euro dollar, but use the data feed FXCM, which happens to be a broker outside the United States. They offer like a volume profile, which basically shows the amount of volume that they have, that they're recording as a broker. And they could show you the peak, it'll show you the peak periods and then the lulls in the market. And you tend to see those lulls around periods of the market when there's less volatility and those spreads are wider, okay? Now, what it's important for you to do is when you're at home, figure out where you're at. Where I live in the United States might be different than you. You might live in Asia or in Europe or in Australia, someplace different. Well, then you have to think about what time is it for you and what major markets are open at that point in time. And when they open up, you start to see higher volatility. You start to see more orders being processed through the market from banks, from traders. And we need that for higher volatility. Now I'm going to give you one, I'm going to say trading tip that I've picked up over the years. I live in the United States. And when I live in the United States, I know that about the time that I wake up in the morning, I know that the European traders are going on lunch. And when I'm getting in front of my computer is about the same time those hedge fund managers, those institutional traders that live in New York or Connecticut or on the East Coast, I know they're getting in front of their computer. Guess what happens right around that time? If you're in Europe and you've been trading all night, for us, you were trading while we were sleeping, and then you're in North America, you're getting to your desk, what do you think the Europeans are going to be doing around that time? They're probably going to be taking some profits off the table, or maybe closing some positions that they've been working throughout that night, right? While you were asleep. So when you wake up, if you're in the United States, right around that time that New York traders, around 6 a.m. East Coast time, somewhere around there, you start to see an increased volatility. You start to see reversals in prices. That happens because a lot of the European traders tend to be taking some profits off the table, or they tend to be closing positions, getting ready for the North American position. So if you know that going in and you live in the United States, then you know, hey, I might be looking for some reversals around that time, or maybe you might get some pullbacks so you can join a trend that you've been looking to trade in recent days or weeks. Guys, I hope this information finds you well. I hope this all makes sense. And remember, give us a thumbs up, subscribe to the channel down below. Don't miss any of our other content that we bring you here. My name is Blake Morrow. You've been listening to Trading Tips with ForexAnalytix. Have a great day.